Go. Yeah, so we're bringing you a topic today that crosses everyone's mind in their home buying journey. Mostly first-time home buyers, but certainly anyone that's looking to buy a new home. Hey, how much can I afford? Which is a real fun question. So we're going to lead you through that. I'm going to go through the agenda here, which is introduce the speakers here in a minute. How much house can I afford? We'll then follow up after a really cool discussion for about 18 minutes of our time today on what we believe are the important tips and tricks in that. And then we'll finish with the 3 takeaways that we really want you to remember. And of course, all of those closing remarks and information at the bottom. I do want to remind everyone that the chat box is open. So please, that's the best place to put your questions. We ask that everyone does stay on mute and keep their cameras off just so we have great call performance. We do have some buffering issues if cameras start coming on. So I appreciate that. So make sure to get your interaction and questions into the chat box if needed. So let's jump off and meet our today's speakers. First up is Jeff Sugar. Jeff is a loan officer for us here at Michigan First. Jeff, I'm really interested to hear about what you offer our members in regards to that home buying process.
Very good. Thank you very much, Dan. I've been with Michigan First Mortgage since 2016, and I've been in the mortgage business for 20 plus years. The unique aspect that I bring to the mortgage business is I've been in both sales and operations, meaning I've worked in the sales side and I've worked in operations where they have the processing, underwriting, and closing. So it's a distinct advantage for my customers when I can help them get their loans through the process and close quickly. I pride myself on dedicated customer service in the state of Michigan in both purchase and refinance transactions. Also, a unique aspect is that I'm a mortgage lender, or we are a mortgage lender, not a broker. So you're dealing directly with the source of the money to where you'll experience lower fees and lower interest rates on most transactions.
Yeah, and that I can't emphasize that enough, that those, especially with Michigan First, those decisions lie with us here right at Lathrop Village. We don't rely on anyone else upon the approval or conditions of any of the loans we do. And that is, in our opinion, and certainly I think in our members' opinion, comforting and certainly efficient. So thanks, Jeff. I appreciate you joining us today. Let's move on to our special guest, Andre Salami. Am I saying that right, Andre?
Yeah, Salami.
Salami, great. He's a broker owner at Perfect Fit Realty, and he's joining today to help us from the real estate perspective. So, Andre, take a little time and tell us about yourself and what you offer our members.
So, on a personal note, I'm happily married to an awesome nurse. We've got 3 beautiful girls, 6-year-old and twin 4-year-olds. And, they are my why. They are why that I take such great care of my clients, because they're family to me. So, I get asked this question probably most often: what's going on with the real estate market? And what I can tell you is this: I have seen a slight uptick in inventory over the past week to 10 days. However, demand buyers are outpacing supply sellers. So it's still a very competitive market. But you will be putting yourself in a better position having an awesome loan officer in Jeff and an awesome real estate agent working for you on your behalf, fighting for you on your behalf.
That's great. And I see you were born and raised in Detroit and
Yes.
Moved back here most recently. So that's awesome.
Yeah.
We love that history, especially us Michiganders, right?
Yeah.
So you did mention the market, so I think maybe we'll start there. If you think about what we've been through in the last, really 36 months now, 24 to 36 months, we've seen interest rate rise, actually come down a little bit, which is encouraging. We've seen, certainly an inventory issue, overall, not only just affordable homes, but all homes. We're starting to see some of the higher end homes sit for a little bit, but certainly, as you mentioned, in that affordable area, we certainly are still seeing some challenges. I actually did an online search this morning based on another piece of information that I'm working on. And for a house 175 purchase price and below, 3-bedroom, 2-bath, a normal home in the city of Detroit, and I think there was 379 available homes for 64 square miles. So that's what you're talking about. Those affordable type homes are really getting squeezed out. So we're going to expand on that a little bit today, but I want to get right into our topic. So Andre, talk to me. you know, we first want to know how much home I afford, which Jeff will touch on that a bit, but how long is it going to take me to find a home today? If I come up with that number, how long is it going to take an average buyer to find a home today?
So what I'm seeing with my own buyers that I'm working with, some get lucky right off the bat, right? And we find it within a week. Some take a little bit longer. I've got one that I've been working with for a few months, but understand that client is really narrow focused what they're looking for, and so they understand it is going to take longer because what they're looking for is so specialized. But what I tell every buyer, don't worry about what anyone else is doing. Only worry about what you can do to put yourself in the best position. What you can afford is what you can afford, and that's between you and your loan officer. I will never tell you what to write. I will only give you the information that I can to put yourself in the best position with the best information. So I tell all buyers, don't be ashamed of whatever offer you need to write. We write the best offer and put the best foot forward, and whatever happens is going to happen.
Yeah, we've certainly on this webinar been preaching patience for a while now, and certainly we'll get into some of those details on what the work is you need to do to get there. But ultimately, if you're ready and your offer is solid and you pick a solid realtor and lender, you're going to get an accepted offer eventually. And sometimes that can happen even faster than you think. So really cool. So Jeff, on that note, if you think about it, what are the five or how many aspects? I'm thinking there's five main aspects of affordability should we consider?
I think the five main aspects of affordability come down to your monthly gross income of all applicants on the loan that you're trying to achieve. Next would be the total monthly debt, meaning credit cards, car payments, not monthly expenses, but credit card, car payment, any loans that show up on your credit report, which will establish your debt to income ratio. The third, I feel, would be the purchase price, the down payment that you can afford, giving you your total loan amount, because that's going to be the part that we're going to have to determine if you can afford. The wild card in some of these transactions, when you're getting a pre-approval, especially a first-time home buyer, is the estimated property taxes and homeowners insurance that'll be on that property. That's usually an educated guess. I mean, we do have abilities to look up different property tax areas, and also get estimates on homeowners insurance from some of our referral sources. Last but not least, what everybody thinks about, and especially today, is the current mortgage rates. But where we can help out here at Michigan First, and I feel we are very, very competitive, is we have very competitive closing costs and fees charged. We charge the same fee for a $500,000 loan that we do for a $100,000 loan.
Yeah. Yeah. And those are real expenses. It's not like we pad anything. The cool part of being a credit union, and I've worked on both sides, certainly of the gamut in there, but we are a nonprofit. So that first box we check isn't profitability. We certainly have to return for our current owners who are our members, a profitable organization. You can't lose money, but certainly we do have lower fees and, lower rates in most cases than other organizations. So I heard you, Jeff, say, it really starts, that hasn't changed. Income and debt. Those are the two things that you really got to work on up front and make sure you understand what those are. And while you may tell me that I can afford a $250,000 house, until you understand how that fits into your current budget, you may not want or be sustainable in a $250,000 house. So really having that conversation and doing the work up front is important. And I'm sure Andre is going to tell us that just because the house is selling for 220 doesn't mean it's going to finish at 220. It might actually finish at 240 given today's market. One of the strategies they have. So speaking of Andre, is there a process for home buying? And how, in your opinion, how does that work? What does the process look like?
So I can speak for myself. I've been doing this for over 13 years, and I have a process that I've put in place, and it works. And it is ever evolving because it has to with market fluctuation and stuff. But, I always start with a consultation, whether you're buying or even selling. I start with a consultation, and we go through some information to put you in the best position. And honestly, one of the things I talk about and stress throughout the process is make sure you are getting the documentation your loan officer needs to process your loan. The better you are, the faster you are at getting that information to the loan officer, the smoother the transaction is going to be, especially once we get under contract. Any delay is no good.
Right.
All right. No delay. Any delay is not good. And so the process starts for me. We start with a consultation. We go through basically the playbook. This is what's going to happen. This is what it looks like. This is what it looks like for you. And one of the things I do stress, and we touched on it earlier, was just because you can afford a $200,000, $300,000, $400,000, $500,000 home doesn't mean you've got to spend it. You know, you and Jeff, you and your loan officer, you're going to figure out what is your comfort level. Okay. And that's what will set up your search, is your comfort level, not necessarily the top of, you know, what you've been approved for. Because if that's not your comfort, let's not start off putting you in discomfort when you're owning your home, especially for first-time buyers.
Yeah.
Right. Because that just puts you behind the 8 ball. So it's a collaboration. You know, think of it as a tandem bicycle, you know, with 5 seats, and we're all working in the same direction to get to the closing table. If everybody's pedaling in the same direction, it makes it go faster and smoother.
Yeah. You know, we're in a real estate market that hasn't seen a lot of new development, especially in the affordable home market in the last 10 or 15 years, certainly, maybe even 20. So those homes may need some maintenance. So buying the home, while that is in decent shape now, roofs, furnaces, hot water heaters are all expenses that come after that are surprises. Jeff touched on taxes. You know, when the home's appreciating value, the tax rate it's at today is going to change. And certainly those are all things that are to consider. Not to scare anyone. Homeownership is a wonderful thing, right? So there's plenty of studies out there. You hear me quote the figure all the time that somebody that rents and somebody that buys, the same person, 5 years later, the homeowner has 40 times the net worth as the renter. So there is a way to build generational wealth by paying for housing, and that should be paying yourself and thinking about that equity that's coming back. So Jeff, using all of that, we just heard Andre talk to us about that expectation. You know, what is the 28-36 rule? Certainly we hear these numbers being thrown around in our industry a lot, but what does that mean to the average person, 28-36?
Yeah. What that means, Dan, is that it's the guideline lenders use to determine the house they can afford based on your income and your debt. So you hear people call, you know, we love in the mortgage business acronyms. So you hear somebody say DTI, you wonder what that is. It's your debt to income ratio. It is the debts that you have, cars, credit cards, student loans, things like that, compared to the monthly gross income of the applicants on that loan you're trying to receive. So the 28 represents your household ratio, meaning that's the ratio that most agencies, Fannie, Freddie, are looking for a housing ratio, meaning your housing payment, property taxes, insurance divided by your gross income. And the 36 is your total debt to income ratio, which is the total of your housing payments, property taxes, insurances, and all debts that you have, car payments, credit cards, things like that. So that's called your total debt to income ratio.
Yeah, and that doesn't include utilities or cell phone bills or things like that. It literally is the contractual reoccurring debt that you've acquired. So great analogy on car payments and things like that go into that number. And to be very transparent, 28-36 is a bit of a 1980s number. You know, a lot of times we approve using automated underwriting through Fannie and Freddie, people above that number. Mischief, for example, has a top limit. What is their top limit?
45.
So 45% DTI is a max on theirs. And that's a lot more than 36 when you think about that. Back to Andre's point, like you have to be comfortable with the payment and sustaining that payment, you know, even in a month maybe where you didn't get as much OT, and that you can get through that payment. So while we can approve you to that max limit, you just want to make sure from a comfort perspective that that is a good number for you to be sustainable. And I'm not going to lie, for a first-time homebuyer, that is scary. It was scary for me when I bought my first home. After a year of doing it though, it's not as scary. So having that knowledge and making a very informed decision up front is important. But home ownership is rewarding. So a lot of this sounds pretty scary, but I want to make sure that we get that point across. Back to Andre. So talk to me, what are the biggest pitfalls that our buyers are going to run into, our first time home buyers? Where's that landmine that I don't know about?
It's all in their head.
Okay.
Seriously.
Yeah.
Buyers get so concerned over, well, what's going to get accepted? What are they going to do? You know, someone else has more money than me, or someone else has a bigger down payment, or someone can afford more. None of that matters.
Yeah.
You can only do what you can do. So don't worry about things you cannot control. Get out of your head.
Yeah.
Trust me, the process in your head is a whole lot harder than reality. Okay. I tell all my clients, you're going to have 1,000 questions. I want you to ask me those 1,000 questions, because whatever scenario you're going to build up in your head is going to be 10 times worse. So just ask me. I've been doing this long enough. Trust me, I've seen many different markets.
Yeah.
And I can tell you, the biggest pitfall is in your head.
Yeah. Sometimes we get in our own way, right? So we certainly do. And that's where the consultative nature of a real estate professional and a mortgage lending professional like Andre and Jeff are super important. You know, we have over 30 loan officers here at Michigan First. I always say it's like somebody for everyone is here. You find somebody that you match personality wise or information wise, and you can trust and respect and move forward with that person. And while your journey is going to be, you know, find a house in a week and close in 30 days, or find a house in a year and close a year after that, depending on, you know, how that offer situation goes, it is a relationship through that. And one we think lasts into that next house or the one after. If you think about it, we always say you're dating the rate, you're married to the house. So if you go through that scenario. All right, well, I like that. So we get out of our own way now. So Jeff, what do I need to do for a down payment, and what are the options? I've got no money. So what do I do? I want to buy a house. I make enough money. I got no money. What do I do?
Yeah, well, that's where sometimes a lot of first-time home buyers are apprehensive because they think they need to have 20% down. Well, that's not true. You know, the agencies, Fannie Mae and Freddie Mac, they have a minimum down payment of 3%. The more you put down, the better your monthly private mortgage insurance is, called PMI, which is an extra expense on anything that has less than 20% down. If you get to 20% down, then you have no private mortgage insurance. FHA, the minimum down payment is 3.5%. But there's many options out there available. Even if we go with, you know, if you qualify VA or USDA, you can get 100% financing through those programs.
Yeah, and who's going to give me money for a down payment? Like even at 3% on a $200,000 house with my closing costs, I'm going to need 12 or 13 grand to close. Where's that going to come from, Jeff? Like, what are my options out there?
Michigan First, I myself am a certified MISTA lender. MISTA is the Michigan State Housing Authority, and they have a down payment assistance program that you can get up to $10,000 in down payment assistance if you qualify. They have qualifications such as a maximum purchase price of $224,500. They have income and area restrictions, but there are also a lot of other down payment assistance programs out there, depending on where you live and what you may qualify for.
Yeah, and you know, we work with the Federal Home Loan Bank and a few others that offer.
Yes.
They do get funded and they do run out of money, but they generally get refunded at some point. I just heard the city of Detroit is back with their grant. So if you've lived in the city in the last 12 months and you're buying a home in the city of Detroit and it's for your primary residence, I think it's up to $25,000. If it qualifies, there is a process to qualify for that. So definitely check that out, or more importantly, reach out to Jeff or Andre and talk to them about that. So, all right. So we're all the way up to thinking about, we bought a home now, Andre. So how do I think I touched on it briefly before, but how do property taxes get calculated, and are they going to go up? Like, you know, the person that owned a home bought it for 100 grand. Now I'm paying 200 for it. Well, what's going to happen?
So in the state of Michigan, property taxes are what's called capped. So once you purchase the home, you know, that first year they become uncapped at the new purchase price. And, you know, there's a formula for it, but easy math is this. You take half of the sales price plus inflation times the mill rate. So, different municipalities have different mill rate. For example, Farmington is 42 or 47%. Southfield is around the 40%. If you go to Detroit, it's at 55. If you go, Plymouth is 37. So it's all different. And there is no crystal ball, right? It's just, that's, the rule of thumb that we like to use. It's half of the sales price plus inflation times the mill rate.
Yeah, to figure out where it might be. And certainly, Jeff has some resources at his disposal too that can kind of hone in on that a little bit better. There is certainly a number of resources out there to hopefully figure that out. And millage rate, I know you said mill rate, but millage rate, we always use shortened things in this industry for those. Somebody's asking on there, I just want to address it real quick. Who has good insurance for homeowners? Well, certainly Michigan First Insurance, which we're going to give some information here at the end of the call, is a great place to shop. But it really depends on where you live and what your situation is, depending on which insurance company is the best. And I would tell you, for all our members that are listening, the best thing you can do is shop your insurance every year. I mean, it is a commodity and you have to shop it. And we've seen rates go up based on a number of things, both here in Michigan and nationally, but always good to shop those, especially first-time home buyers, because that's if you think about it, an expense that nobody really thinks about until you buy a house, So, Jeff, coming back to you, we talked a little bit about this, but if you could just take a deep dive on all those loan programs you talked about. I as a first-time home buyer, I don't know the difference between Fannie and Freddie, but as a loan professional, how does that all work for a first-time home buyer and figuring out what I can afford?
Well, that's where the pre-approval comes in, Dan. Andre and I have worked together for a number of years, and it's important for every first-time home buyer we get together and get a pre-approval and determine what is the best loan program available for you. You have your agencies, Fannie Mae, Freddie Mac. Those are for typically your conventional mortgages. You've got your FHA mortgages, which is a government backed mortgages, which gives you a little more flexibility on qualification factors. We also offer VA, USDA, and as I mentioned, the MISHDA down payment assistance program. MISHDA also has a program that's available that if you don't need the down payment assistance, they have a program that if you qualify for MISHDA, you can get a rate of 6.00% currently. And I've done a couple of those in this past year, and it's a great program for first-time home buyers.
Yeah. And I think, we stay away from the rate conversation a little bit because that is a big effect on the affordability of the home. But if you think about, at the very low point, post 2020, so in 2021, 30-year fixed rate mortgages got down right near 3% for a 30-year. We got as high as almost just over 8% this recent, last 18 months. We're back in the mid sixes now, right, on a conventional loan, right, Jeff?
Right, correct. Yep.
So, yeah, if I would have told somebody buying a house a year ago or a year and a half ago that your rate now is 8 and you're going to be able to get it for mid sixes, that's a lot of money in affordability. But again, that's back to that dating the rate, marrying the house, and really just buying at whatever rate level we're at and making sure we're comfortable is super important. We are going to have, Zareen just shared that in the chat box. Thanks, Zareen. And then I want to get this one in because it's super important to me. So, Andre, do I have to have a mortgage pre-approval? Like, what's the deal?
So listen, in theory, no, you don't have to have a mortgage pre-approval to go look at houses. But guess what? You are setting yourself up for failure. Me personally, unless your financing is in order, I'm not showing you any homes. None. I don't care who it is.
Right.
I'm not going to waste your time. I'm not going to waste my time. I'm not going to waste anyone's time. You need to get your financing in order, because just because you think you might be able to get approved for something doesn't mean you can. You would be surprised. Sometimes you can afford more than you think, and sometimes it's less. But until you have that pre-approval, you just don't know. And any offer that we would have to write has to have that pre-approval. And in this market, you're not going to have time to go look at a house and then, oh, well, let's go get a pre-approval, because that may take 24 hours, 48 hours. By then the home's gone and now you're upset. So
Yeah.
no, I'm not going to do that to anybody. You have to get your financing in order and before you go looking at houses.
Yeah.
It's
So
just the
Jeff,
way it is.
what does it cost me to get a pre-approval at Michigan First?
Costs nothing to get a pre-approval at Michigan First, and there's a big difference between a pre-approval and a pre-qualification. Some companies will give you a, oh yeah, you can get a $300,000 mortgage loan by just pulling your credit report. Well, that's dangerous for everybody involved. You know,
Right.
we at Michigan First do a legitimate pre-approval where we're doing the application, the credit, collecting income, assets, and running AUS upfront. AUS is the automated underwriting system through Fannie and Freddie to make sure that we can qualify you for that $300,000 if that's what your desire.
Yeah. And certainly pre-quals are important, because there's no hard hit on your credit, which is a little bit of a fallacy when you're shopping. You do get a number of credit pulls and it doesn't affect your score when you're shopping. But pre-qual is really just that beginning conversation. Here's what I make. Here's what I think I owe. How much can I kind of afford? Now, you're not going to get very far in a contract negotiation with just a pre-qual. You need a pre-approval. So, Zareen, if you could, we're right at the time. I can't believe how fast today's time went. I want to bring this slide up. This is, whenever we do these calls, very important. So, Andre, why don't you kick us off from your perspective? What are the three things you want our members to remember?
I'll just go right off the list. Why is it important to have a realtor? You want someone negotiating on your behalf, fighting on your behalf. Okay. Yes, you can call the listing agent, and yes, you can have them write your contract, but they were working for the seller first. If you don't have any relationship with them, what's to guarantee that you're going to have someone fighting on your behalf? And what's the importance of a down payment? Honestly, that's between you and your lender, right? I don't ask you for your personal information, right? That's between you and them. The only thing that I'm going to ask Jeff is, what are they pre-approved for? How long do they need to close? And is there anything special I need to make sure that I put into the offer? That's it. Okay. And then, I already talked about the pitfalls. Get out of your head. Ask the questions, get the answers, and have peace of mind. That's why you hire a professional. That's why you have a realtor. That's why you have a loan officer. Let us take the worry out of it for you.
Yeah. Do the work, be patient, and get prepared. Owning a home has been one of the best things that's happened to me in my life, and certainly that I think could be for anyone on the call. So Jeff, from your perspective, from a mortgage perspective, what are the three things our members need to take away?
Well, as we talked about, pre-approval is important for all of us. That not only gives me a comfort level that I know I'm working with someone that's qualified, but also gives Andre the confidence. But most of all, it gives the sellers, real estate agent, and the seller's confidence that you do pre-qualify for this loan. So the other thing would be the total payment and total price. What type of down payment requirements would you need? How much house can you afford? And then it's going to be the type of loans and payments that you can afford.
Yeah, so we hope that you work with Michigan First, but just remember, those are the questions you should be asking, certainly. And that total payment, like, what do you think in your mind should be your housing payment, is probably where you should be focused on what you can afford. So, all right, guys, we're at the end of the call. So somebody was asking for in the chat, here's the contact information. So take the screenshot now. For general information about the series, the Homebuyer Webinar Series, please email us at info@michiganfirstmortgage.com. If you want to apply, we certainly have an online presence. We have a very robust point of sale system. You can see all of our loan officers at michiganfirst.com/mortgage, or call the 800 number 24 hours a day, 365 days a year to get to a loan representative. Or more importantly, reach out to Jeff. You've met Jeff today. Jeff's a great resource, a ton of application experience here. And there's his contact information. And Andre, I want to thank you certainly for being on the call today. And here's Andre's information at Perfect Fit Realty Group. There's his email address, and certainly maybe reach out to him on that 586 number to get in touch with him or get more information. And without regard, we did have a call or question today. Michigan First Insurance Agency is out there. We use over 40 insurance carriers to shop against those markets that you might be looking to buy auto and home in. So reach out to them directly at michiganfirst.com, michiganfirst.com/insurance, or at their 800 number. Thank you all for joining the call today. It was a really fun topic, and it is one that certainly is near and dear to our hearts. So thank you for attending, and have a great day and enjoy the weather. It's going to be awesome this weekend. Thanks, Tang. All right, bye.
Thank you all.
Thanks, everyone. Thank you.